Ladies and gentlemen, you're very welcome to a review of the Irish pig sector. So it's a review and outlook by Michael McKeown. A few quick stats for those of you who are not familiar with the Irish pig sector. The value of the pig sector estimated in 2020 was 941 million. And when you look at this on an average per Irish sow unit, it's about 3.5 million. So where did all this pig meat go? About 25% was exported to the UK and 45% was exported to China. When we look at the number of active herds, this is herds with a herd number. There's about 1,641 herds in the country that are active herds, but of these, there's only about 320 of them which are a size to be commercial herds, so they're over 25 sows. These broken down into integrated herds and finisher herds. When we look at the employment in the sector from rural employment, it employs about 8,000 people. Of this, there's about 1,200 on farm and 6,800 in the associated industries. So looking back at 2021, what happened during the year? The year that was, there was, I suppose, 5 main features. First of all, there was a Chinese slowdown. We exported a huge amount of pig meat in 2019 and 2020 to China, but there was a slowdown during the middle of 2020 on, middle of 2021 onwards, and this had an effect on the prices. We'll see. Irish cereal prices were very high in 2021, which is good for the tillage producers, but unfortunately not so good for the pig producers, as 75% of the cost of producing a pig is cereal-based or feed-based. The other feature was the improved efficiencies. So after over the last 10 years, the Irish pig sector has improved its efficiencies year on year, and in 2021 there was no different. So the output of pigs per sow, the born alive, the growth rates, and the slaughter weight all rose again this year. Unfortunately, the slaughter capacity in Northern Ireland was a feature during the year. So we would usually export about 12% of our live pigs up to Northern Ireland for slaughter. Unfortunately, the slaughter plant up in Northern Ireland had a staffing issue, and therefore they weren't able to slaughter the usual number of pigs, which has caused a bit of a backlog on Irish farms. And the last feature, I suppose, was the German African swine fever situation. So for those who aren't familiar with it, African swine fever is similar to foot and mouth disease. And the Germans had an outbreak in September of 2020, and this it has continued to be a feature during 2021. So this time last year, what did we forecast would happen? We said that the Chinese market would cool. This would have an effect on the demand for pig meat and the high supply, and that the pig price would fall. So we estimated it would fall from 174, which was the average price in 2020, to 159 for this year. And the average has turned out 159, which is good. Unfortunately, cereal prices is another issue. We had gone into 2021 with ingredient prices and cereal prices being at a fairly high level. We did think that these would fall at harvest time if the harvest in the Northern Hemisphere was at the 5-year average performance. Unfortunately, this didn't happen. They had a drought in North America, and also the French crop had a lot of rain at harvest time, and that affected the quality of it. So as a result, instead of the price being forecast at 109, the feed price actually rose during the year to 118 cents a kilo. So if we just have a look at the feed price, we can see here in the month of January, it started at a relatively modest level of 315 euros per ton. But as the year progressed, you can see it rising the whole way through to an estimated cost in December of 363 euros a ton. Overall, the average for the year is 337. When we look at this at feed cost per kilo deadweight, we can see again the trend is the same, and we estimate in December it was 127 cents per kilo, and the year average was 118 cents. So when we look at this in a 5-year average, we can see it's much higher than the last 5-year average. So the lowest there in the last 5 years was in 2017 at 103 cents, which seems a long way away now when we're dealing with 118 cents for 2021. So big difference in it. The flip side of the coin then, what happened to pig prices during the year? The pig price was very good in the center of the year there. You can see it 173 cents a kilo. Unfortunately, due to the cooling of the Chinese market and the lack of demand, we could see then that the pig price then has started to slip from the middle of the year onwards, and it was a steady slip the whole way through to an estimated price in December now of 146 cents a kilo. Average price for the year there was 159. Now, when we look at this over a 5-year average, we can see 159 is a fairly good price. And it's on the back of 2 bumper years there in 2019 and 2020, where the price of 169 and 174. And even go back to 2017, like 162 has also been a good price. So the last couple of years, with the exception of the 141 for 2018, the pig price has been very good. Unfortunately, for 2021, it's the input price of the feed ingredients that has been the problem and has affected margins. So we look at margin over feed. We can see in the middle of the year, it was actually quite good, but then it started to slip as feed ingredient prices rose and the pig price started to slip. And we're down to 19-cent margin over feed there at the moment, which is very, very low, and an average for the year of 41 cents. And again, if we look at this in a 5-year average, we can see there 41 cents there is a very mediocre margin over feed. We would estimate you need 45 to 50 cents for a pig producer to cover all their cost. So you can see 41 cents is very low. However, it has come on the back of 2 bumpy years of 59 cents to 66 cents. So hopefully these 2 years will help the sector to be able to get through the losses in 2021 and into 2022. So when we look at the profitability, estimated profitability for 2021, we think it'll be minus 3 cents a kilo, which works at a 264 pig, and on an average size unit of 600 sows, that's a loss of about 43,500. But you have to bear in mind again, at least to come in on the back of 2 very good years in 2019 and 2020 there of 232,000 and estimated profit of 334,000 in 2020. So that is at least something as we go into 2022. So what do we think is going to happen for 2022? Again, we have similar features. We have the Chinese, obviously huge influence on the pig price, African swine fever, ingredient prices, and then Article 16 as well. I'm not going to cover Article 16 in the presentation here, but it will be covered in the company paper. So if you want to read that, it'll be covered there. So just looking at Chinese market again, this is a date there from January 2019, January 20, January 21, as far as October. So they had an outbreak of African swine fever in China at the end of 2018. This caused a liquidation of their herd or culling off a large number of their herd sizes. As a result of that, there was a shortage of the pig meat. So the shortage of the pig meat obviously led to the price rising, and you can see here as scarcity started to kick in, the price started to rise and rise. They then started to rebuild their herd, and they rebuilt it at a very fast pace because the profitability was so good. And unfortunately, they have, I suppose, they've overstocked the market, or there's a surplus now of pig meat. As a result of that, then the price there for 2021 has decreased from the start of the year to the finish of the year, down to a negative there in October of 11 yuan a kilo, which is below the break-even point. So what do we think is going to happen? As we mentioned, the sow herd in China has recovered rapidly. There's 26 billion was invested in new units over a 2-year period. This is called the oversupply. There's been a slump in the domestic pig price there for 2021, which has resulted in the liquidation of a lot of their non-performing herds. Also, then the volume of pig meat imports from the EU and elsewhere has declined from the middle of the year. And if we look at some of their largest companies, Moyan there, which is one of the largest pig companies, lost an estimated 280 million in the month of October alone. So the losses have been massive. It's run into the billions for the Chinese sector. However, the good news, I suppose, from our point of view and the Chinese point of view, is that from the start of October, when it was 11 yuan up to December, is the domestic price for pig meat has increased from 11 yuan up to 18 yuan, which is an increase of 60%. And if this continues on, then it will start to trigger an increase in the pig meat imports from Europe and elsewhere. This is just a graph there showing the increase there in exports from EU to China through 2019. You can see it month by month rising into 2020, all the way through 2020, into 21, and then unfortunately then the fall off then from the middle of the year. And this is as far as October, but the anecdotal evidence would suggest that it has continued on for November and December. So what do we think is going to happen? We think that the rise in domestic price and the liquidation of some of their herds again is going to lead to an increased level of imports from the EU. And this will start to kick in from Q2 onwards. And this will help to rise EU price and the Irish price. So looking at African swine fever then, as I mentioned, this was initially spread in Eastern Europe by wild boars. There are 3 German regions are infected by it, and they've had about 2,000 cases of African swine fever in the wild boar population in Germany. The German market has been excluded from the Chinese markets since September 2020, and this is important for a number of reasons. One, they're the second largest EU sow herd. They were also the Chinese's 3rd largest source of pig meat. So they've obviously been knocked out of the market, and that's left it open then for the other countries to fill this void. Due to the low German price as a result of all of this, the German sow herd has fallen by about 12%. And as I mentioned, it is the 2nd largest in the EU, so that's a big fall. And if you take in the German, the Danish, the Dutch, the Polish, and the French sow herds, it's estimated that they have fallen by about 300,000 sows. So that is a big fall in the last 12 to 18 months. Just looking then at the pig feed outlook, we mentioned cereal price there will be a feature of 2022 as well. The 3 main ingredients we have for pig feed are soybean, wheat and barley, and maize. So I'm not going to cover the maize here, but as I mentioned before, it has been covered in the pig paper if you want to read on that, read more about that. For soybean, the Chinese are the biggest users of soybean, and they expect to import about 100 million tons of it in the forthcoming year. The Brazilians on the other side are the biggest growers, and they expect to grow about 140 million tons. And this is looking really, really good at the moment because the planting has been ahead of schedule, and the soil conditions for the planting have been extremely good. The rainfall is very good. Soil conditions have been very good as well. So it is all looking good for high yields. The current price there at the moment in Ireland for soybeans is about €385 a tonne for 2022. And this looks likely that it may fall if the Brazilian crop yields are coming in around about 5-year average performance, which is looking good so far. However, the one risk you have is of La Nina, which could give drought conditions during the growing period. Now, if this did happen, it would affect the yields, the expected yields, but hopefully this isn't going to be an issue. When we look at wheat and barley, we can see that the current prices are exceptionally high. It's bounced around from €310 a tonne up to €320 a tonne at various times, and it has been exceptionally high. Unusually, the price jumped in the month of October and November, and this was due to a number of reasons. One, the Australian harvest is due to be harvested shortly. The yield is still expected to be about 34 million tonnes overall, but there was a lot of heavy rain there at the moment, which may have an issue on the quality of the wheat, so hopefully it won't. The other issue was that the US winter wheat ratings have been very low. They've been in mid-40s there for some of the winter wheat, which will be a little bit concerning for the market as we go through to the harvest next year. And there's a few other things. One, the Russian export tax, that they changed the Russian export tax for the wheat and barley. And this had a shock to the market, and also the higher fertilizer prices as well. That will be an issue in the forthcoming season. And the closing stocks for barley are also very low. However, the good news, I suppose, is that although the harvest was lower for wheat, due to the high price of wheat, the inclusion for animal feeds, etc., across Europe and elsewhere have been a lot lower. As a result of that, the stock to use ratio there, which had been low, is starting to climb back up for the major exporters, and is now forecast near the average. So if we look at 2021-22, it's at 30.9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9%, 9% it's only about 1% higher at 31.8%. So we're not far off the 5-year average, which is good news. As a result of this, we think that the market price for wheat has likely peaked. And as long as there's no shock again to the Australian harvest or the Russian winter kill, where they don't get enough snow cover, or that there's any shock to the South American maize harvest, which would affect the wheat price, we think that the price will start to ease during 2022. It's still going to be at a high level compared to recent years, and it's not going to collapse by any means, but we think it will start easing back. However, it will take a very good North American harvest or even the Northern Hemisphere harvest to really bring the prices back to a more moderate price by the end of 2022. This is just an interesting graph here. There you can see the prices there in the yellow and the red and the grey line. So that's the price of wheat there, and you can see the years here at the bottom. But if we look at the stock to use ratio of the main exporters of wheat here, and we look for 2021 and 2022 there, and look at the level that they're at, and go back then to 2014, 2015, and 2015, 2016, it's a very similar amount. But look at the price of the wheat during these years compared to the price of wheat now at the moment. So this is why we think that the wheat is probably overvalued at the moment, and we think we will see an easing of it back due to the stock to use of the major exporters. So bringing all of this together, what do we think is going to happen for 2022? Well, if we look at the pig price and look at feed price, and we'll try and pull it together. So for 2021, the green line here is for 2021. So you can see the price there for 2021. The pig price had been high, falling down, as we mentioned, at the end of the year. And that's continued on in for the first 3 months of 2022. After that, then we start seeing it rising, and it's rising on the basis of the Chinese market and the increase in exports to the Chinese market. And it's also rising on the basis that the EU, that the drop in the sow herd size in the EU will start to kick in here. And it is a supply and demand that as the supply starts to tighten up, the price of pigs start to rise. When we look at the feed situation, I suppose it is not quite as rosy looking, unfortunately. So we can see here the purple line there is for 2021, as we mentioned, and the feed price rising and rising. We believe there's going to be a rise there in January of 15 to 20 euros a ton there, and that's going to start off the year of 2022 very, very high. It's going to be at least May before we start to see a drop in the feed price there. So you can see it there, it's leveling there, and we forecast that there may be a small drop in May, but that's about the earliest. And this may, in fact, be out as far as June or July even, but that's the very earliest it may be. So we can start to see it sliding back down as ingredient prices start to ease and as the Northern Hemisphere harvest starts to kick in. So hopefully it will be a good harvest and it'll help to ease prices back. But overall, we can see there that the feed price for 2021 was 118 cents. We forecast for 2022 125 cents a kilo. And on the other side, then the pig price has gone from 159 and it increased slightly to 163. But overall, the margin over feed is only 38 cents a kilo. So compare that to 41 cents a kilo for this year, which was actually tight. This is even tighter, unfortunately, for 2022. So it's not going to make for good viewing, I suppose. The one issue that the averages here don't actually show, I suppose, is the cash flow trend on it. So we take the graph here and we say, right, this is the pig price for each of the months for 2022. And if we said, right, the margin over feed is going to take at least 43 cents to be able to cover all of your costs. We normally say 45 to 50 cents, but even in a very tight year, they need a very, very minimum is 43 cents to be able to cover all costs. So if you add 43 cents on to the pig price, and that there in the red is the cost that you would is the cost per kilo of producing a kilo of pig meat. Unfortunately, there we can see it's at 176. So we're only bringing in 146 and it's up here, it's somewhere 176. So the margin over feed is going to be very, very tight. In quarter one, about 13 cents, quarter two, 32 cents for the first 6 months of the year, and then the second 6 months of the year, it improves then to 46-cent marginal feed. So we're getting back into a profitable situation here, and definitely a profitable situation for the last 3 months of the year. But unfortunately, it is the first quarter there that is really going to hurt. And the first quarter, the monthly deficit there for 600 sow units is going to be about 36,000 for the first 3 months of the year. So that's going to be very, very painful, and it is going to need an injection of funds there to be able to carry the pig units through for the first quarter. Again, for an 800 sow unit, it's higher, 48,000, and for a 1,000 sow unit on a monthly basis there, it's about 60,000 a month they need. So it's not a great outlook for 2022 for the start, but however, as the year goes on, the profitability will improve, and by the end of the year, it will be much stronger. And that's one thing I suppose we need to hold on to as we go into 2022. Thank you very much for your attention, ladies and gentlemen, and speak to you again soon.